The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And hope you guys are doing well. Got my bi-monthly workout in this morning, so broke a little sweat on this side of the fence here. Let's take a look at the Australian dollar. And I want to take a look at the Australian dollar. I want to take a look at gold kind of together. One of the things that we always talk about is, you know, when we get to some of these inflection points, it's not necessarily a turnaround situation. I'm showing the weekly situation on the Aussie dollar right now. It's more of like a target type event. And if it goes through, it goes through. You're the big winner already. But, you know, now we're kind of in a waiting situation. Now, this is the daily situation. We'd love to see it spin around here and not really want to get away from these weekly unfair highs. I'm actually pretty bullish on the Aussie dollar, especially considering some of the rhetoric with their monetary policy right now. But I want to take a look at gold also really quick in that same light. I was looking at hemp a while ago. HEMP might be the coolest symbol for a marijuana stock. But let's take a look at supposed to lift some bans on some marijuana-related companies. I was just kind of cruising through some this morning. Gold, again, you know, talked about, you know, not necessarily a time to reverse this. It was just more of kind of a target situation. Hit it again or yesterday, excuse me, and came off of that general area, 1366. I think we had 1364 and some change. So, again, you know, this is kind of a wait and see. If you want to play gold, you got some leverage here. Excuse me, here around the 1347-48 area. But remember, 1366, 67, it's going to be problematic. It's kind of targets, whatever you're doing. If we have a weekly close above there, the horse could be out of the barn again when it comes to gold and the Aussie dollar. That's why I wanted to bring those up this morning, because it's very similar, somewhat similar situation. Notes, just to hit the usual suspects. Again, you know, I don't know how wrong you can go, you know, same old story on the notes. I don't know if shorting is in order on these things. Considering looking at what the S&Ps do, they just seem to find support when they can and bounce off of it, and that's really just been the case. This is the daily. You got a new lid up here at 2183.50 on the S&Ps. That's going to be something you can lean on the short side if you're going to be doing any day trading. But remember, that is, again, recent highs. High is 2183.50. The top of the profile is 2183.50. It's a little bit wider profile than the previous one, but again, this is nothing away from the average. So, you know, what does this all mean? Looking at the breadth statistics, I don't see, you know, I mean, a lot of people don't see this thing selling off, which is concerning to be long right now, because it seems like the world is, you know, feeling okay about being long equities right now. And that's when things usually change, when everybody gets on the same side of the boat. So, again, you know, just to reiterate, the major inflection points around 2150, like we were on the bottom of the last profile, 2152, and top of the box here, 2183.50. Again, you know, no real breakdowns going on here in the S&Ps, and that's why it's so amazing, just so amazing to go back to the 10-year. And I know everybody is talking these things are going to break at some point, but again, you just got to look at it for what it's worth. I mean, it's holding up. Market's making new highs. If we ever get a market pullback, you think these things are just probably going to shoot the moon here again. Dollar, I like how this thing is kind of held in there in the face of you know, some things going on with currencies around the world. again, I'm blocking out the short side on the dollar. So again, what does that mean? That means that I'm buying 95.20 and I'm buying breakouts above 95.98. That's it. We're kind of a little bit in no man's land down here, and I'm looking to trade that on longer term views. All righty. We're going to take a look at the Shanghai again. This is going to become interesting. Got a little bounce here off of those weekly unfair lows of a new very thin profile. It looks like we're setting up to possibly move higher. But again, when this Shanghai gets going, there's some decent points to be made in something like this, because if this thing breaks trend, and right now, if you kind of step back and look at it, lower highs, higher lows, profile getting really tight. Keep your eye on this one. This is going to affect a lot of things going on here, but they're claiming that, or they being the Chinese government and all the people who manipulate that market over there and the currencies and all the whole nine yards. Read some stories on it. That's kind of a whole show to even talk about that, but you can get some fundamental concepts on what's going on there. We talked about copper yesterday a little bit. The Glencore news, a lot of things out there saying that we're not going to exactly be on fire in the next 12 months. I like how copper's hanging in there. I like how copper's making higher lows, and I like how you got a little chance to play defense here. I think this thing, again, people getting on the same side of the boat. I actually think copper could get up to 230, 295, but the good news is, you always try to have really good risk rewards scenarios in place, and you don't want, like, right in the middle of a profile here, not a lot of direction, etc. You got a chance to, just like when Tom and Tommy talk about, Nadex spreads, you want to, you really can, and Daryl Martin talks about this religiously, you really want to try to increase, the bet 1 to win 10. Or 7 or whatever. So, these inflection points allow you to kind of think on those levels. And that's kind of, going back to the Aussie dollar, that's kind of one of the things that we always looked at with that. And again, with the Japanese yen. So, again, it's all about the math equation. If you can be half right and use those type of setups where you're risking one to make 7, 8, 4, 10, you are going to be a big winner in this game. So taking losses is a part of it, but the risk reward scenario is basically how every automated trading system succeeds. Okay, taking a look at crude oil. We talked about this, and we're going to talk about it a little bit when we get back. We really came off of that 43.33 yesterday, and that was a really decent trade. I actually put that trade on myself. Guys, we'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. And how about that Nico and Paige hour on Tuesday and Thursday morning? If you guys don't listen to that, do yourself a favor, check it out. They give some just sick, killer information. I mean, I listen to it because, you try different things. You try to figure out at some point in your life what's going to work for you. Everybody's different, of course. But, some of the things that they say, especially some of the things they said this morning, about the carbohydrates, they talk about quite a bit, the health and wellness show that they do. That really works for me. I mean, it decreases inflammation when I, do some of the similar things that they talk about. And then, less pain. You don't have to devote energy to that. I feel a little bit better. And then how does that correlate at all to what we're talking about every morning? It allows me to have a little bit clearer head. I'm a little bit more alert. I feel better, and therefore I'm not making dire, decisions, when trades are going against me. I'm a little more structured because I just generally feel better. So, if you haven't watched their show, do yourself a favor, listen to it. They are extremely accurate, in my opinion, on a lot of things that they say. So, crude oil. We talked about this yesterday, 43.33. And, of course, don't eat at Ralph's. That's one of the bigger comments and advice pieces that I can give. But crude oil, this was showing a hint of a new profile attempting to appear, and you get this in the scanner. Now, that yellow kind of peel back, and I'm going to go to the futures section here. This had that yellow kind of connotation here on crude oil, and that means that, we don't have to have a new profile lock in, and we reached the top of that daily. We're in a downtrend. So, again, that has disappeared. And how do you play this as far as, trying to increase the odds? Again, talking about the risk-reward scenarios and, how do you kind of cheat a little bit? In my opinion, a lot of times you can go into these ETFs and find some things. And we talked about SWN at the end of the show yesterday. I want to talk about that and a couple other things. I haven't even looked at it this morning, but let's go into the XLE. And we talked about, why not, in case oil just shoots through 43.33, and especially as a daily close above there, let's try to find things that just are raising their hand as sick pieces of crap. And let's actually short those, because if the market rallies, those things a lot of times sometimes they'll reverse, but a lot of times you're kind of in something that's already showing its hand early. Apache, I'm just going to pick the first one. This is one that we had broken down below in weekly profiles, kind of came back and retested it last week. And then, kind of levering against this little situation down here, had not cooperated with oil in that rally up, and henceforth, subsequently, I'm proud of myself for using those words today, we are coming off. All right. Now, the other side of the coin, if oil had kept going north, maybe this stock just would have sat still and you would have suffered no pain, in essence, trying to short oil. So I'm a huge fan of doing this, or excuse me, of using this type of methodology to trade sometimes the underlying instruments by cheating and finding things that are kind of showing their self early, if I haven't said that enough. EQT Corp, we talked about this one. Again, Mark, oil comes off, boom, here we go. If you can see that. They're not exciting trades a lot of times, and they just kind of just continue to sell off in situations like this. And one of the cool things about using a relative strength type and relative weakness type trading situation is, you're trying to, again, increase the odds, but you're also trying to, for the trade to be relatively painless if you're wrong. All right. So we talked about EQT, a couple other ones that we had on the board. RRC. Let me look at this one. Well, that one actually we weren't talking about, but let's take a look at Southwestern SWN. So oil comes off, and this comes off a little bit. I talked about the long-term trade on this one, just looking pretty attractive. I wouldn't call this having a violent reaction on the downside to oil coming off a couple of bucks there. And we talked about the long-term view on this, and not necessarily the day trading view on this. Let me see if I can expand this. Here we go. So here's what it looks like, and if you kind of step back and look at it for a second, it's really kind of staying the course. It's not a lot of volatility there. Valero, we talked about that getting into 53.78. That one actually wouldn't be exactly one of the weakest instruments out there to look at. We've kind of looked at, I think, Marathon Petroleum lately as a strong stock. Yeah, and if you're this is kind of the other side of the coin. If you're looking to short instruments to increase the odds, this is one that you're definitely staying away from on the short side. This is not one of the candidates to throw in that basket. And lo and behold, we've actually got a profile appearing below price action here on MPC. So if you're looking to buy strong oil stocks in case we blow through, or to kind of play a little bit of a hedge, this is definitely one to block out the short side. Let's see here. Let's take a look at ExxonMobil really quick. Now, as you can see, this is our daily view. Let me show our weekly. So, this one had already broken through, and we were kind of coming up into that area. Again, this one was basically kind of mirrored oil as far as the inflection point type situation at the time. Does this mean that Exxon is going to continue to go south? I think you've just got to look at this as, if you're looking to try to pick up oil stocks, this is not the one to buy. But right now, oil's kind of done its thing. It's kind of getting back into the middle of the range, and I don't see a lot of leverage here. Continuing to short ExxonMobil, it kind of did what it was supposed to do right there. Let's take a look at Halliburton here. Yeah, I mean, this is one you kind of throw out on the short side. Noble Energy. I like this one on the short side too. Guys, we're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. 2 stocks, I'm looking at breakdowns, just again, relative to profiles, just a little very simple sort. This didn't take a lot of math on this one to do this sort. We talked about 2 stocks the other day, looking pretty sick here. Western Digital, not wanting to get out of its own way, sitting on the weekly and for lows, finally busted a move. Can I use that term? Was that from the 80s? And also, we're going to look at PRGO. This is another one we were just saying, just good Lord, you know. And things on the lows go lower, and you want to short weak stocks. Yeah, we'll go back to look at slob in just a second. Young MC, was that the guy? All right, so as we look at this, let's do another sort here. Let's look at stocks that are kind of poking their head up here. Chevron, CVX. Yeah, let's take a look at slob while we're over there. SLB, excuse me. All right, so we go down to Schlumberger. Here's the daily, here's the weekly. Yeah, I mean, I know this pullback with oil coming off a little bit here, but to me, I'm not super excited about buying oil, the underlying, right now, and let me just kind of show you why. If I go back to oil, and then we're going to come back to slob in just a second. Just to reiterate and step back here, I mean, you know, we're not looking the most healthiest situation in the world right now as far as the underlying oil September contract. And if you look at the daily, this is basically no man's land. I mean, we've got not really even a wide profile here, but you know, you don't have anything to lean on to. And like I talked about earlier, you know, that's where, like, you know, Tom and Tommy talk about this all the time, you know, getting that spread on Nadex really heavily in your favor, those binary spreads. So, you know, when you come, same principle, when you come into these areas, these are areas to pick battles, in my opinion. And, you know, when you get down into this, and then you kind of got that weekly staring you in the face, I'm sorry, I was looking at the dim. When you have that weekly staring you in your face, and then you've had this kind of meandering in this area right here, I mean, there's not a lot of risk reward scenarios that look very attractive to me here, and there's nothing to lean on. There's no fence. There's no areas to pick battles. And again, this is my personal preference, and this particular scanner is really built around some of those concepts. So the question is, you know, I love how this thing is. I mean, we kind of horses out of the barn. We come back and we're kind of looking at support. At bare minimum, this is not a stock to be shorted right now. All right. You've got much better things that we talked about with that general concept earlier. This is one, again, who asked that question? Who asked the question on slob? Russ? Yeah. So this is the good news. You've got a profile that's edged higher, and you've actually got a profile that is at the same time below price action when it appeared and locked in this week. And now you're coming back and finding that support. I mean, and again, keep your stops in, but you've got daily and weekly inflection points lining up at the same time. And let's just go into Schlumberger. You see that top there, and we're pretty much in the vicinity of that. Let me see where we're at pre-market if we got a print here. Yeah. Do we? 10th? Not yet. But again, I mean, this, you know, to kind of do the hedge thing where you're buying strong oil stocks and selling weak ones, this is the one to be bought. I mean, I love how this thing's acting. I like how it's kind of fighting the trend in general of oil. And it kind of just did that little empathetic pullback into an area of support on oil pulling back. So again, you know, I like this setup a lot. I'm glad you pointed it out, Russ. Okay. All right. All right, just reading the rest of the comments here. Okay, so Let me go back to the S&Ps. There hadn't been a ton to conjecture here on the S&Ps lately, and we've had. Let me pull this back up. Go back to the dashboard here. I sincerely look at these breadth calculations up here. We spend a lot of time on this, and it actually takes a lot of resources to calculate all this stuff real time for you. But when I look at this, I don't see any cracks in the armor. I mean, a lot of times, a couple of times a year, maybe, we'll see long-term anomalies going on and happening. And sometimes they're at kind of tops in the marketplace. So when you see these weekly numbers starting to roll over sometimes, I mean, I think, what was that? That was a super good one when the market was kind of topping out again and we were really starting to get weak on the long term. You just don't have that up here. And therefore, it's not actually the most rosiest situation here to look at. I just killed my e-signal here. Hold on. Oh, no. I can't get it back. Oh, God. All right, we're going to have to figure out how to. Here we go. Ooh. So it's not the rosiest situation in the world to look at it from the short side yet and start backing the truck up. And, it is what it is. I think Tom had mentioned like 2200, 2220, somewhere up there. That's probably in order. And it's probably going to coincide with some new rhetoric from the Fed on rates, and then the political scene getting a little more possibly locked in, and that's really starting to look ugly for one side of his own accord. So again, this is kind of a wait here on the S&Ps right now. All right, let's take a look at a couple other stocks here. KSS. Actually, let's look at Coors first. All right, so here's the situation on Michael Kors. I have no idea how they make money, but we're going to talk about this when we get back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. We promised to look at Michael Kors here. It looks like, yeah, real print 49.29. So I don't like to trade before earnings. Had some numbers come out yesterday. It's bouncing a little bit off of these unfair lows here at 48.54, but kind of a no trade. I don't see I hate this company, actually. I bought a watch that had Michael Kors on it. It was awful. Anyway, Shake Shack, that means nothing in the grand scheme of things, of course. It's just a personal vendetta. Here we go. Shake Shack. Says it's down almost 10% here. But again, looking at the profile, it's just an area. I mean, this is one, it's kind of like a GoPro deal. You just find the resistance and sell it when it's offered. Kind of hit that almost, and now we're backing off. I actually think we're going to, this is one. Got problems. Here we go. Somebody mentioned love in the den a while ago. I just wanted to look at this one. This is, again, not participating well. Southwest. Talked about this the other day. Talked about it getting, this was on the downtrend resistance sort recently. And 3801 came off of there. This is, again, talking about picking battles at areas that are giving you a chance to put risk-reward scenarios in your favor. So coming off 3801, what do you do with it now? I don't think you buy things like this on support. You sell these types of things, and you wait until you have some resistance. And have we met downside targets yet? Probably not. I know you hate, let's see, here we go. All right, let's take a look at 3 other stocks here that are coming out today. Macy's, they talked about these things pre-market coming out with better earnings situations. So 38, 39, somewhere in 38, high 38s, 39, somewhere in there. Macy's, again, this is why I don't trade them before earnings announcements. And we're up in here, folks, right now. So what do you do with this now? We're above some profiles now, and I think this is not one to chase. KSS, again, similar reaction this morning, 41.60. Still not up into, for Kohl's, 43.08's got to be sold on this stock. That's the kind of the most recent breakdown of profiles, and that's kind of where you're waiting. I don't think you really do anything with this right now. You could try it off of this 41.46, but remember, the market could kind of drag some of these things higher. And let's take a look at JWN. Nordstrom, 46.85. And again, I think you just got to stay away from these things. Kind of slow death. Good Lord. Let me type in the right symbol here. Amazon. Let's hit that. This is just really a fine example of something not to short. Above weeklies, above dailies. Mark it off the list. Come on, charts, get going. IBM, kind of similar situation too. You got some, long-term looking great. Got a situation where we're coming down into new daily profile appearing below price action, kind of similar to that slob situation in a sense. Sorry, guys. Man, I put a solid state drive in this computer yesterday. It's just everybody's got to do that now. 3M, what's the story here? I think you got a lot of things in your favor on 3M now to really kind of ramp up again. I know it's not an exciting trade right now, but I think, this thing's just kind of sitting here waiting. It's not participated lately, but I like how this thing has acted. Any type of market pullbacks, you could have some decent moves in 3M on the north side. Let's take a look at Intel. Charts are slow this morning. All right, so looks like pre-market we're at 34.74. So this is the situation on Intel. I kind of like this as a little bit more of a daring trade on the short side. We're kind of starting to look a little heavy here. 34.60, you can play around with that number. I like this thing to explore the fair auction a little bit farther south here. I like how it hadn't really participated lately. Let's go back to the scanner for a second. And let's look at stocks that are in a kind of a defined downtrend here. Not expecting a market pullback, but if we do, see there's Kohl's, there's Southwest Airlines that we talked about, there's Noble Energy. Noble Energy might be a decent little short right now. Tractor Supply, let's take a look at this one. Ouchie. All right, so closed below last week, getting some legs, could play defense at that 87.52. Using the scanner and just kind of picking out these things that are not exactly doing well is not a bad way to trade sometimes when the market's really, really ramped up. You have things that are definitely showing themselves. Coca-Cola, Gilead Science, we talked about this one. Not a lot of reasons to be long this thing. And we talked about, getting below these profiles on the weekly. I'm going to spread this out a little bit here and using that to play defense around 80.32. We talked about that actually when it ramped up and, closed below and then kind of retrace back up into that area. Again, these might not be exciting trades, but they definitely can be painless if you're wrong. DHI, I think you got to stay away from that one. All right, let's go back to look at a couple of grain situations here because I haven't covered those in a while. We've talked about the corn crop. I mean, they are expecting insane numbers around here. Here's September wheat. What do you do with wheat right now? I'm still not a big fan of being long these grains, and even though we kind of got back into the balanced area there and we got a new profile attempting to appear, I'm just not a huge fan of being long the grains, and there's definitely no way to play defense on the short side. September beans. We got into this area, 99 or $9.99, $10 a bushel, and backed off. We talked about that the other day. I just think that's the lid right now. Guys, we'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
So here's that November bean situation. Here's the charts on the scanner. Again, coming into that $10 bushel psychological area along with that $9.99.70. Let's just call it $10 for all it's worth. And then we backed off there. So again, that's kind of, again, talking about what Tom and Tommy talk about on the binary option hour and spreads and things like that, really waiting until those you can get some good bang for your buck. And that's part of this game is just being patient and waiting. So that's the drill there. Let's take a look at going back and covering a couple of usual suspects before we end the show today for guys who are joining us late. Crude, you know the story there. Kind of in no man's land now. Not a lot of leverage. Not a lot of good risk-reward scenarios. Gold definitely has backed off for sure. You guys are aware of that. Off of that 1366, 67 area. And again, have gotten back above 1348. And I'm just looking at it as now support. I love how gold is kind of, again, higher lows, compressing a little bit here. And I think at some point in the very near future, we're just going to bust through 1366, 67. And, some people start covering this. This thing could get out of control on the north side. 10-year, you just got to be long, period. Find support on the dollar right now. The currency situation, The euro, you know my stance on that one. Still love the short. Daggone it. Got to reboot that. Can't look at the currencies. Let me get it back up. There's the euro. It's kind of a long-term trade. Here's the British pound. You know, talked about this. This wasn't super attractive for this to kind of, you know, get a little bit of a bounce, and then all of a sudden we're back down here, and this is what happens. And not a lot of leverage here at this stage. We're down below this DMZ from 130.19 to 130.89. Here's what the daily profiles look like on this one. We could head lower on this one, folks. The yen congregating down here also. We talked about this possibly doing a flush below par there. So again, this is kind of a wait and see, and then I'd like to get long this after the flush and get back above 100. I still think there's never a free lunch out there, and this may be one of those things before the you can do the happy dance on the long side. We got to get some people out of the trade, so to speak. Yeah, Mount Mitchell might be a good place to watch that. If you've never been up there, it's a pretty cool scene up there. All right, we got about 45 seconds left. I want to hit the ETFs really quick just to flash those. The XLU, again, kind of dependent, seeing what the 10-year is going to do. Some people kind of exiting this sector a little bit, but when you look at the long term, still not a real terrible situation. You got a pretty wide profile, and you got a POC here now, 50-41. After we had broken the dailies here, you got to sit on the sidelines and you got to wait. And we've got a little bit of support on that top of the mountain on the weekly now. Guys, stay tuned for Basil. He's going to fill in for Larry today, and you'll thoroughly enjoy it.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.